Welcome to the Edified Equity Podcast. My name is Dino, and here we focus on all the unique benefits associated with being a passive equity investor in an apartment syndication. You can learn more about us on the web, iTunes, Stitcher, Facebook, YouTube, and our award-winning blog on Bigger Pockets. All associated links will be in the show notes. On episode number 23, we're going to be discussing more multifamily in today's uncertain market. Really? As an active investor and multifamily syndicator, I'm constantly looking to connect with people who have tons of experience in the space. I'm looking to seek their knowledge and learn from them so that I can soak up their knowledge and wisdom and become better. I believe you should always be improving and aiming to better yourself. I recently attended a conference in New York City, and I found myself in front of a gentleman who has 30 years and 30,000 doors of experience in the commercial and multifamily space. This is someone that I really wanted to rub elbows with and learn from. While speaking on a panel, here's what he had to say when questioned about purchasing multifamily assets in today's, quote, uncertain market, end quote. Now, before I jump right into it, I have to set the stage. With all his knowledge and wisdom, there were many people in the audience, including people on the panel and the panel moderator, that were undoubtedly expecting him to express his fear and proceed with caution type of response. I mean, with all his wisdom, he couldn't still be buying in today's market, right? Well, nonetheless, he swung. And I mean, he stood his ground and swung for a first round knockout and connected right between the eyes. Let me tell you a little bit more about who we're dealing with here. This gentleman is an honors graduate of Yale and a graduate of Harvard's Business and Law School. He was able to eloquently articulate his point and defend his choice of asset class, which is the B and C workforce housing. Now, he did this by saying, I disagree with the, quote, uncertain, quote, market comment, and with all the certainty he can muster, he shared his experience during the Great Recession. He went on to explain that in the Great Recession, his net operating income, his NOI, actually dropped 2% from 2007 to 2008. Then he experienced an additional 1% drop from 2008 to 2009. Since then, he said his net operating income has steadily risen and it hasn't stopped since. He went on to say, and proved through his experience, that when done correctly, this asset class can be a recession-proof investment. As for today, he noted that it's not a secret. Home ownership is at an all-time low, and renting is very popular. And it's not just the millennials. He reminded us that we're a renter's nation, and the baby boomers, too, have no plans on buying a home in the near future, and they have joined in the renter's nation. His thoughts on the reason why we're becoming more and more a renter's nation is experiences. Experiences are important to both generations. And in my opinion, experiences should be important to everyone. But he said that they actually prefer the renter lifestyle and the amenities that B and C class apartments have to offer. For example, a pool, a health club, dog parks, parks for children, daycare, things like that. The key, he said, to keeping your rent at market is forming a community and giving people a true sense of home and belonging. Have your property management company arrange for summertime barbecues, events like Take Your Pooch to the Pool Day, organize play dates for preschoolers. That way parents can socialize while having the children meet each other. And that way, from there on, they'll start planning things on their own and say, hey, this was a great time. Let's meet next Tuesday at 3:00 and do it again. After school tutoring sessions in the clubhouse. Make the clubhouse a place that the kids go to after school. Give people that belonging. Give people that sense of community. And when you do that, you make an impact. And that's what makes signing leases easy. Renewing leases easy, even when you're increasing to the market rent. Now, don't get me wrong. He's not saying just go out there and start buying and syndicating apartments. It has to be done correctly, as always. What he urged the syndicators was to be disciplined on your price, your rules of thumb, your choice of asset class, and location. But he definitely, again, stood firm and assured, if you invest for cash flow and you have the right management team, your aim is to make an impact and better the community. And you don't over leverage. The B and C class, safe, affordable workforce housing is a choice asset class. Whether you're an active multifamily syndicator or a passive equity partner looking for a place to make your money sweat for you, I hope this information was refreshing, insightful, and helpful. If you know someone that has a problem finding the right place to invest their money, please help them by sharing this information. I don't have anything to sell, but I am on a mission, and I will be delivering quality consultative content on a routine basis. Thanks for tuning in. Make it a great day. You certainly deserve it. This is Dino Pierce, CEO of Edified Equity, signing off. Goodbye.